Hey guys, I just broke down Chapter 6 into 3 different sub-chapters. I'm just going to go over the different methods of how to trade these support and resistance areas. With the first video, I'm going to show you what would happen if you just trade basically just the support and resistance lines by themselves, irregardless of trend, if you just traded those lines themselves. So let's take a look at this example here. We got a nice 1, 2, 3 buy pattern here. There's bar number 1, bar number 2, and bar number 3. Put the horizontal line again, just so you can see the what the support area would have been. So let's take a look here. Look down here so you can see what I'm talking about. For the high of this bar, it is 156.73. So we would be looking at 6 to 12 pips above that figure. So that would be 156.79 or 156.85 would be our entry for a buy. And as you can see, this went against us for a little bit. It even went below our low of bar number 1. But notice it didn't have a close, or especially a significant close. Didn't even have a close below the low of bar number 1. See how it held there? Okay, so we had a little drawdown here. But it never closed below that. So now that happened, what will be our take profit? We didn't get stopped out, so what will be our take profit? There's a few ways of doing this. One way is just to do basically a fixed set amount of pips every single time. So let's say you wanted to go, I don't know, let's say you want to make 30 pips every trade. There's nothing wrong with that. You just say to yourself, every trade I get into, I want to make at least 30 pips. I'm happy with that. Absolutely nothing wrong with that. You could try that method. Another way of doing it is so you have an even amount of risk to reward is to measure how much you're risking in your stop loss and go for that amount on your take profit. So for this example, we had an entry of, let's say, 156.79 for argument's sake. And our low is 156.42. Oh, 43, excuse me. So let's say we put our imaginary stop loss 1 pip below the low of bar number 1. So that would make it 156.42. We entered at 56.79. Our imaginary stop loss is 156.42. Even though we wouldn't close it close it for a loss unless we had a significant close below the low of bar number 1. But to use this as an equal risk-to-reward ratio, we just take the difference between your entry, which is 156.79, and we subtract that from the stop loss, the imaginary stop loss, which is 156.42. So if you do that, we're looking at a pip difference of horrible at math here. Let me see. 79 minus 42. What is that? 37. So we're looking at technically a risk of 37 pips. Okay, so you can say to yourself, all right, since I'm risking 37 pips and I want to have an equal amount of risk to reward, I will take a take profit at 37 pips. So it's somewhat balanced that way. You're not risking 30 pips to make 10 pips. Okay. Other ways of doing this. You can start to look at the next resistance area for a buy. Everything would be vice versa if you're looking at a sell. So let's take a look and see if we find any 1, 2, 3 patterns for sells. There's a really, really big one right here. It's kind of hard to miss. So you can say, well, this looks pretty good. I'll take a take profit at the next resistance area, which I see is over here, which would be somewhere in the neighborhood of, what is this, the low of 159.08. So take profit minus 6 pips of that is 159.02. So let's calculate that. So you're getting in at 156.79, and you got to take profit at 159.02, which should hit here eventually. So you're talking 200 and some odd pips. That's a pretty good day's work. Well, it took a little more than a day, but still. That's a nice trade. So you can do that. Another way of doing it is seeing if another, in this case, if another resistance area broke. Look at this 1, 2, 3 pattern here. We did break it here. You notice this 1, 2, 3 sell pattern? We broke that when we had a buy here, when we had a close above it over here. So you can just count the horizontal bars going the other way. So this encompasses 1, 2, 3, 4. That's 4 bars. So we count 4 bars the opposite way. 1, 2, 3, 4. And take profit looks like would have been hit somewhere around this area here, which looks to be about 57.73. So what is that? Looks like a take profit of just under 100 pips. Not too shabby. So there's a few different ways of doing this. I don't want to just give you one method, because I don't know you. I don't know what your trading style would be like. I don't know your trading personality. A lot of people like to trade differently. I'm just trying to give you a bunch of different options here. The goal of all this is just to see how price action actually works. I wish I could say all this stuff was mechanical, but it's not. Price action, I don't think it'd ever be that mechanical. You have to have some kind of intuition, or that might not be the best word. Maybe, let's see, just kind of a gut feeling. It's just different ways of how you interpret the market. You know, it's not all going to be status quo every single time, but the more you practice it, the more you back test it, the more you'll see it, and the more you'll get comfortable with it. All right. So that's it for this little sub chapter of chapter 6. In the next chapter, I'll talk about how to trade basically only when the support and resistance areas break.